Good morning, everybody. This is Steve Carr at the Agripreneurship Alliance, and I'm joined by my dear friend and colleague, Anne Roulin, who will be taking some of your questions and answers today, as well as monitoring the chat that we love to read so much. Today's session is number 8 in the series. Yep, it's unbelievable that we're already at number 8, and after this, we only have 2 more sessions. And it's been really exciting for us engaging with yourselves through this format and reading some of the comments that you make, but also seeing your own progress through the Entrepreneurship in Agribusiness course. Today's session is all about raising finance for your business. Today, we'll be looking at some of the challenges that businesses have about raising capital, both for startup costs, but also for the running costs that you need across the year of activity. And it's going to be really interesting. I hope that we're going to be joined by Haj, who spoke at an early webinar as well, to give some of his perspectives. And we've got loads of information for you today. So it's going to be a packed session. I hope that you get a lot out of it. One of the big tips for today is that we will be sharing this presentation, as always, as a PDF. And please do download the PDF when you get the opportunity to. A lot of today is about sharing links to websites, to crowdfunding sites, to competitions, and you can access the links to all of those through the PDF that you can download. So that's a real key point for today. So what we're going to be doing today, just in terms of the program, as I say, I'm hoping that our friend Haj will be joining us. We will be looking, as always, at the module content for this module on the Entrepreneurship and Agribusiness course, which is, as you know, raising finance for your business. We're going to be touching very quickly on some of the financial strategies that you might choose to use, and also looking at some of the challenges and opportunities that crowdfunding brings. And obviously, crowdfunding is something that everybody talks about, but as with all things, it is something that can be bring challenges as well as opportunities. There are lots and lots of competitions that are available for entrepreneurs based in Africa within the agri-food sector. So we're going to be talking a little bit about those. And if we have time, we've got another little video blog, this time from Noura Adam Ahmed in Somaliland, who again is a graduate of the Entrepreneurship in Agribusiness course, this time at the Aigai Sheikh Technical Veterinary Training School. And the last 15 minutes we'll be dedicating to question and answers. So please do make sure that those come through. And I'm really pleased to see that Haj has joined us. Good morning. So just to be clear where we are in terms of the webinar series that we're doing, as I mentioned, this is number 8. It's part of module 4.3 on the course, Make and Manage Money, Raising Finance for Business. Next week, we will be focusing on putting it all together and looking at the art of the pitch. And that's going to be really exciting. We've got some amazing speakers coming in on that one. And then Wednesday, September 9th is the last webinar in the series. And it will be about putting it all together, writing your plan. How do you bring all of the information that you've gained from this course and actually have a business plan, a financial template, and a pitching deck that you can use to share with stakeholders, with customers, with clients, with people in your value chains, as well as people who you are seeking investment from. And that's going to be a key one. And then just a reminder that you then have the opportunity to submit your final business plan to ourselves, and we'll make sure that you get some written feedback and critical comment on your business plan to make sure that it is as good as it possibly can be. So as I mentioned, we have our dear friend Haj here again today. Haj, thank you so much for joining us. I know that you have got a wealth of experience, no pun intended, around the topic of business in Africa around agribusiness and the agri-food sector, and as well within the financial elements that come along with running your own business. So I'd be really pleased and delighted to invite you to speak for maybe 10 minutes, drawing from your own experiences. And so thank you very, very much for joining us today. Haj.
Yes, Stephen, thank you for this opportunity. First of all, can you hear me correctly?
You're coming through perfectly and beautifully, as always.
Okay, I was worried because I got some technical hitches to connect, but hopefully it will be okay for the duration of my intervention. So first of all, thank you for giving me the opportunity to share some of my experience with the participants. As you mentioned, the topic today will be about sourcing some financial means for projects. And I'd like to share with the participants some of my experience, and in particular insist on the necessity to really have a thorough and very good financial planning approach for your projects. It's important not only to seek the and convince investors to put money in your projects if this is what you are looking for, but it's even and foremost important for yourself so that you can get a clear picture and clear understanding of the financial dimension of your project and of what are the elements that are at stake, because of course this is money is key, and it's very important that you can have a very good understanding and master that dimension. You don't need to be a bright chartered accountant, but it's important that you familiarize yourself with the main elements of accounting, and that you master the main components of your balance sheet and of your profit and loss account. In that sense, I'd like to make maybe a first comment on the fact that you will be looking for money for two different things. One is for investments. You may have a project that require to purchase some equipment, to invest in some initial expenses, and these are going to be your capital expenditures, and it's one important component probably of your project. The second big financial dimension is your operational expenses. What will you require to run on a daily basis, so to say, your exploitation and your activities? So first of all, make a clear difference between these two different types of expenses. Capital expenditures, the money will be blocked for a long period of time, probably several years, into investment goods. This could be equipment, this could be a building, this can be a vehicle, which you need to fund over a longer period of time. And your operational expenses, which is the day-to-day money you will need to run your business. So that's the first important difference you have to make. And if you can express that clearly to a potential partner, to a potential investor, then you will also build trust and confidence from their part in the fact that you know what you are talking about. So if we come back to capital investment, capital expenditure, this is typically a machine you will have to buy, maybe to process some agricultural products which you produce. This you will want to know, of course, the purchasing costs, but they could be linked to that also installation or transport costs to bring it to your premises, install it into your premises, get it connected if need be to an electrical network, or maybe you need some side elements to to be also installed. So you really have to take into account all these costs, not just the cost of the machine, not just the cost of the equipment. And that total expenditure will then have to be recorded into your balance sheet as part of the fortune of your business. And it's not an expenditure that will be expensed over just 1 year or just at the moment when you purchase it. Of course, you need the financing for that element, but once you've acquired it, it has a length of use which can probably run over several years. And that's when we come with the concept of amortization. So you have to determine the most logical and plausible duration of use for that equipment. Imagine maybe it's easier to talk about a vehicle. You buy a vehicle brand new, for instance, you can expect that maybe it will be able to run for another 8 or 10 years before you need to replace it. Therefore, the expense for that vehicle, let's say it's $20,000. If you have to replace it in 10 years' time, then you can say this $20,000, which I expense now, I need to find the money for that, but I will really have it as a cost only for $2,000 per year over 10 years. Then you make up your 2,000 times 10, your initial $20,000. That's important because it may look as a big amount of money, and it is indeed, and you need to fund it. But the reality is that it will serve the purpose of your business for a longer time. So the real cost each year will be much lower. That's the first part about your capital expenditure. Then your running expenses, your operational expenses. There, it's probably more difficult to prepare a good projection and a good budget, an accurate budget for that. And I really encourage you to build it from the bottom to the top. So really think of a number. Maybe it can appear like nitty-gritty things, but at least it means that you have thought it through thoroughly. And you then have to value each and every of the expenses that you expect to have. And I recommend that you also try and segregate them month by month so that you get a more precise financial planning throughout your initial year of activity. Probably it is wise to do it for a second and a third year as well, because any projection longer than that, I think, is just wishful thinking. You will see that the minute you start your business, things will be different than what you expected. I always say a budget is valid up until the first second you start the real thing. And then it starts deviating from your initial budget, which is not a big issue, but it's important to have a plan, a budget, and to see whether the reality confirms your expectations or whether you deviate dangerously or not from your initial plan. Now, when you plan for your operational expenses and your day-to-day expenses, you have to also make a distinction between what will be fixed costs and what will be variable costs. Maybe some of you, for you, it's the difference between these two definitions is obvious, but just to explain to those who are maybe not familiar with that. When you commit to launching a business, a company, then you will have a mix of expenses. Some of them you will have to face them every month. They may be not exactly always the same amount, but you have to face them on a regular basis. And you cannot escape from these costs. Whether you are successful or the start of your business is more difficult than expected, you will have to incur these costs. These are typically elements like a rent or wages, salaries, when you have employees. You have to pay your employees every month. You have to pay your landlord every month. So these costs are fixed in the sense that whether your business is going well or not, you will have them. Whether you have one client or 1,000 clients, you will have to face these costs. As opposed to that, you have the variable costs. This will really be linked to the size and the speed of development of your business. So the interesting thing in variable costs is that usually you face them only if you have business, or it's very closely linked to the strength and the intensity of your business. So if your business goes well, of course you will have a lot of variable expenses, and if the business is more difficult, then you'll spend less in that type of expenses. Let me illustrate that by an example. Simply, let's say we were talking about acquiring a vehicle. This vehicle may be for deliveries. If you have a lot of orders and a lot of customers to supply, you will use your vehicle a lot. So you will have to fill the tank, and your petrol expenses will raise because you drive a lot of kilometers to deliver your goods. But that's good news, a lot of expenses for petrol because I have a lot of business. And if you structure your selling price correctly, then you make a margin, you will make earn money from that. On the other hand, if the start of the business is difficult and you don't have as many customers as you expected, then your lorry will remain idle in the garage, and you won't spend too much petrol because you don't have to deliver too many customers. So these are variable expenses, the petrol for filling the tank of the lorry for deliveries, for instance. Another example could be if you grow, let's say, a crop and you have to pack it to sell it to customers. Then the packaging, if you have a lot of orders, you will need a lot of packaging. If you have less orders, you will need less packaging. So these packaging expenses are variable. So if I summarize, you will have to face capital expenditures, which you amortize on a certain number of years, which is the lifespan of the equipment or the machines or the vehicles that you purchase. Then you have the operational expenses, which you make distinction between fixed expenses you have to face anyway, whether your business is good or not, example, a rent, or which are directly linked as variable expenses to the size of your business, example, packaging or petrol for deliveries. So once you've built your budget in terms of capital expenditures and operational and running expenses, then you have the elements which you will use in financial terms to potential investors. Raising funds has always a risk dimension, because when you borrow money, then you have to pay it back. And if your business does not go as well as you expected, then you may be faced with the risk of closing down, risk of bankruptcy, in case you can't reimburse your investors. Now, you have to also structure the deal you make with potential investors. If it's financial institutions or individuals who want just to lend money to you, then they do not have any business risk. And that's maybe not exactly what you want. You may want to have rather a partner, a co-investor, or simply somebody who is looking for, of course, a return on money, but is prepared to share the risk with you. If the person, the investor, shares the risk with you, then of course he must be rewarded accordingly. So it can be in taking shares into your business, or maybe having another form of agreement with them so that you remunerate, but as and when your business is taking off. It's very important in any case that you build trust with these financial partners. And one of the elements to deserve this trust is to be very well prepared and very well organized in terms of presenting and then managing your financial elements. If you can, of course, the better you fund your own activity with your own money. That's always the less risky thing. And anyway, a potential partner or investor will want to see that you take also your own share of the financial risk, if not the majority of the risks. That's also part of building the trust with your potential financial partner. I think I could go on for a long time on different elements linked to financial and experience in that field. But in the amount of time I was given, I think I really wanted to cover these main elements and give you these advices.
Haj, we recognize it's a huge subject, and you're somebody who brings a wealth of experience to it. And I actually could listen to you all day, and I wish that we could. But unfortunately, we only have a little time today. But thank you so much for your insights there. I think for me, some of the key features that you were talking about were about the different types of investment that we need in terms of capital expenditure or investment, but also in terms of money for operational expenses. And key is, as you said towards the end, is the trust that we have to have in and with our financial investors and stakeholders, and the need to ensure that we are fully prepared when we go and talk to people, so that we present ourselves very professionally in terms of we know what we're trying to do, how we're trying to do it, and what the costs and implications are of that.
Exactly. And I'll be with you for question and answers later on.
That is absolutely fantastic. So thank you, Haj. And I will move on with the program. As I said, we've got quite a busy one today. So basically, it's just a very quick refresher on what the expectations are in the Entrepreneurship and Agribusiness course. We follow the same process as we do in the previous modules. You will be able to access a lesson summary, a number of types of tools, video, audio. We build everything, as always, around the Trident fish farm case study, and we have the activity to complete this as well. So the video, please do take time to check this out. It is an important baseline for you to consider. And it's only 5 minutes long, so it's not too much to stream on your phone or computer. In terms of the lesson summary document, you can download this and it will tell you exactly what you should be doing within this module. And I'm going to be touching a little bit more on this very quickly shortly. One of the key issues for us is in this module, you are using the revenue and cash Excel document that you have already downloaded and have started working on. And we've talked about this document within previous webinars. You will recognize this first page, which is your startup costs and your CapEx, your capital costs. And one of the key things for me for today's workshop on raising finance is the idea that on this document, you can see that we have a total startup cost of $442 and a total equipment and capital costs of $4,300. So remember this, we have just under $5,000 on this document of finance that we need to be able to, for Trident Fish Farm to be able to launch their business. So this is an important fact. I need $5,000 to start my business. Where does that money come from? Then in the same tool, the revenue and cash flow tool, and obviously I continue to refer to Trident Fish Farm within this, we have got the cash flow, annual cash flow that Haj was also talking about, the idea of your working capital, your operational costs that you will need to do over the course of the year, taking into account the cost of expenditure that you will be incurring to create your product or service, to enable that product or service to operate across the course of the year. So this can include energy costs, water, land rental, inputs and so forth. But it also includes revenues, how much money is starting to come in. And you will recognize that on the bottom line of this, one of the key elements is your cash position. And this is going to be really, really, really important. I cannot stress how important this is. Because as a new business or as a growing business, it may well be that you are operating in debt for a significant period of time, particularly if you're a new business and you're just starting out. And as you can see on this document, in May, Trident Fish Farm is in debt to the tune of $7,793. So they will need to find investment from somewhere to enable them to cover at least $8,000 of debt, to enable them to get through to the month of July, when they will start being able to see operational profit. Now, I will just note that some of the figures in the document that you can see right now are different than the document that you will have downloaded from AMI. We've recently updated them, so please do be aware of that. So Trident Fish Farm, working on the figures that we've got, are looking for initial investment of nearly $5,000, and they need an operational cash flow of nearly $8,000 to enable them to operate in their first year and to end with a degree of profit. So how did they finance this? And there's traditionally two ways to do this. One is the traditional funding, where we look at trying to get a large amount of funding from one individual or one institution. And so the types of funding in this, as our friend Bora last week was talking about, is things like venture capital, angel investors, or traditional financial banks. The second area of finance that a lot of people are really excited about is the opportunity of crowdfunding. So the ability to bring in smaller amounts of money, but from lots and lots of different people. And crowdfunding is going to be something I'm going to talk about next. From experience, it is not as easy as it looks, and it does take significant amounts of time, and it is complex. That doesn't mean that it won't suit your business, but you do need to explore these issues properly and decide what is your financial investment strategy. Is it traditional? Is it a crowdfunding approach or something similar? Or is it a blended approach where you're taking funding from a number of different sources? So in terms of the module, you can download a tool which is exploring the different types of finance that are available. This includes traditional sources as well as crowdfunding and non-traditional sources. You have a tool that you will need to complete to finish this module, which is enabling you to identify what your cash gap for year one is, what investment do you need, how will that finance be, what sector will that investment come from, and what organizations you might actually receive such funding from. So you're coming up with a strategy on how to gain your investment that you need. And as always, we give you an example from Trident Fish Farm about how they go forwards in terms of seeking their investments. So we want to be practical today. We want to give you some ideas about where you can actually source funding from and where you can actually get funding from. One area that we'd really like to link you into is this website. It's called Nourishing Africa. I am not going to try and link into the direct website today, just purely for technical reasons, but the website is excellent. It's a fantastic resource for anybody who is entrepreneurial in Africa and within the agri-food sector. And so this website is, and I have included a link to you when you download the PDF to it. The website does provide you with access and information on a whole realm of different funding opportunities for your business, as well as providing you with documents which can provide and inform your financial strategy. And so this website, when you go onto it, and please do go onto it, you will find that there's information on crowdfunding sites, on financial institutions, on competitions as well as a host of other organizations that offer financial support in some way or form to entrepreneurs, both at launch stage and at growth stage. So please do check out this website, Nourishing Africa, and the link to the website is in the document when you download the PDF. So talking about crowdfunding, what we then have is that there are a whole range of different approaches to crowdfunding. We have got a whole range of information here about the different approaches, and I'm not going to talk about all of them. Please, this is downloaded from the European Commission, and I've included the link to that. So please, this is well worth a look when you come to exploring this module further. But some of the issues here are, one is, are people willing to give you money basically for nothing? You have got a great business idea and people want to support you for the intrinsic value that you bring. Donation-based crowdfunding. Do you see crowdfunding as a way of creating sales for your product and getting investment from people before you've actually started producing it or making it? So this idea of rewards-based crowdfunding, people will actually receive something physical and tangible from the donation or support that they give to your business. And then there are issues around peer-to-peer lending and equity crowdfunding and so forth. There are a number of different models, and it's up to you to see what is available within the environment that you work in. It's important to be able to identify what crowdfunding strategies, if this is a route that you decide to take, is appropriate and best for you. And so we wanted just to highlight 3 websites here, just to give you a better idea about what some of the opportunities are. There is a site called Africa Start, and again, it provides more information, a bit like Nourishing Africa, on opportunities that are available to you. So this is a source site, somewhere that leads you to other types of provision. In the middle, we have got Kickstarter, which is focused mainly on the global north, but has global aspirations. And Kickstarter is a site that enables an entrepreneur who has a product to actually start selling it, to get investment for the first iteration of a product before they've maybe started producing the first lot. And it enables you to ensure that you have got a customer base for your first product. And that includes people who are willing to pay up front before they receive. So that can be a useful model. And if you look at Kickstarter, quite often products include technology, arts and crafts, a whole range of different things. The third one I have here is something that the Agripreneurship Alliance has got experience of. This is one of our fundraising approaches, and it's called global giving. And this is the donation model, where people, because you have got a project which does good, which has got social values to it, people may well be interested in providing you with investment because of the work that you do, without expecting a direct physical product return. One of the key issues about global giving as a site, again, it's a global site, it's active in Africa, is that they are run a very particular process of recruitment to enable agencies and businesses to access their site. So you go through a training process before you can actually launch a campaign, a fundraising drive on their website. So global giving is actually well worth a look because of the training that they provide and the steps that they take you through in terms of how to design a crowdfunding campaign, for example. So global giving is well worth a look. And again, I've included all the links to these different pages here. But these are just some of the websites that are available. Please, you will need to do the work yourself if you can to try and identify others. This is a useful document. It's a bit academic in some ways, but it does highlight some of the challenges that crowdfunding has. One is it is more difficult than it sounds. It does take time. It does mean that you're investing your time, which does cost your business money, to actually do these things, both in terms of setting up a campaign, but then also monitoring and engaging with the people who are supporting you. You need to be very clear about what your expectations of crowdfunding are. So what type of model, hybrid, donation, product-based, what type of platform actually suits your business best? How are you going to get paid? How is the money going to be transferred from a potential investor's pocket to your own? How does payment work? It's an important to consider. And you need to consider the contributor network as well. And many of these crowdfunding campaigns will be driven by the network that you already have. This is a key factor within any crowdfunding campaign. It is based upon your contacts, your network, and your ability to share your message out and to have that amplified by your friends and colleagues. The last point here, which is important, is that crowdfunding can have non-monetary benefits by which you can gain publicity. People can gain awareness of you as a business. It enables your business logo, your business profile, your unique value proposition to be shared across other networks. And that can be very, very important. So crowdfunding is an important way of gaining investment in today's business environment, but it's something that you do need to consider carefully as to whether it's a good opportunity or potential for you and your business. One of the other really interesting areas for funding at the moment as well is competitions. And there are a lot of both local, national, regional, and global competitions which people can enter into. Again, these can take a lot of time. So it is an investment that you need to be very aware of if this is something that you want to do. But the thing about competitions is, again, it gives you profile. It can give you free publicity. It can aid your visibility. And even if you aren't the prize winner in a competition, it can provide you with access to other investors who may be willing to support your business. So competitions are well worth thinking about. As we all know, Go-Getters is a really core, Agripreneur Prize is a really core competition within this. And as we can see, the opportunities that you have had from joining the Go-Getters Agripreneur Prize this year. So it can give you access to other opportunities as well. So competitions are well worth thinking about. And so just to give you an idea of what's available, you have all of these competitions that are on this slide. Some of them are focused on women entrepreneurs. Some of them are focused particularly on food. Some of them are focused on particular geographical areas. But all of these are worth thinking about. And again, we have included the links to each one of these in the logos that you can see. And this list is not exhaustive. There are plenty more, but it's up to you to be able to identify what is a good competition for you, what is available for you, and whether it's something that you think it is important to invest the time and energy to enable you to pull together an initial application and then to see that application through. But one of the prizes that I do want to specifically mention right now is HULT. And it's a global prize that works right across Africa and beyond. Next week, we will be having a presentation from somebody who went through to the global finals in the United States of America last year as part of the HULT Prize. But the key thing about HULT Prize is it is open now. So you have an opportunity to start the registration process for the 2021 prize. So please do go and have a look at HULT out of these as an immediate action to do. So lots of competitions, lots of opportunities. Moving on, that's really everything I wanted to say about crowdfunding, investment, financial services today. It's a core important feature of your business and will help define your final business plan. I was going to include a short video today from another graduate of our course, from Noura Adam Ahmed, but I don't think we've got time for this today, but it will be included on the PDF document that you can download. I am aware that we have got a question come through. And do you want me to look at it now or? No. Okay. So we have started getting some questions through. Let's see what we've got. Abdul Karim is asking, please may I ask if a team with the same project submit the same document? So the easy answer for this is yes. Okay, so basically, if you have got a business team group that you are working together and collaborating, which I think is really important. It's always easier to run a business if you've got a group of people with complementary skills rather than trying to do it by yourself. If you have got a working team that you're developing a single business plan on, when it comes through to submission on the online platform, please submit it as individuals so that you can each download your own online certificate of completion of the course. We will then provide you with the opportunity to submit one business plan from that team to ourselves so that our experts can critically review it. And when we do that, we ask you to provide the details of each of the team members on it as well, so that we can see that it comes from a collective business. And we will be providing a lot more information about the submission process for the critical review of your business plan by email later this week, but then we will also focus on it very clearly on session number 10 on the September 9th. We have another question.
Then we have Moses, who's asking what are the key elements to include in a pitch deck. Hi Moses, how are you? Actually, next week we will be covering completely pitching. So that will be the focus of next week. We'll go through the course materials, and as Stephen mentioned, we will have a contribution from the Marula creative consultancy, and they were the ones who ended up through all the finals of the Holt Prize and were one of the 6 remaining finalists pitching in New York. So they will have a lot of experience to share with you.
We then have another question, and please, everybody, if you have questions right now, please do send them in. If you have any questions that you would like to put to Haj about his perspectives on investment, please also share those. And I know that Haj is still online and is able to join us. So Kamuye Nora has sent another question. What do you have for starter companies venturing into crop production?
Thank you, Nora. Well, this is rather a general question. Actually, the whole course is valid for any type of agribusiness, whether you're going to primary production, processing, or crop production, or whatever. All this material is relevant for that. I think to answer your question in more detail, we need to know what type of crops you are thinking about, and in order to be able to share some more information on that. And this is when you can share what type of crops you're going to focus on. This is also very good to share on the WhatsApp platform, because we had, for example, we've had people putting in questions about poultry production, and immediately there was a whole set of resources that came from different participants on the WhatsApp platform, giving very useful information. So, send some more details, and then we can certainly help you more closely.
We then have another question, which is about, I'll read it out. I have heard from you that each person should have a group. What if I do my business plan alone? Let me try to be clear on this if I've muddied the waters at all. We are more than happy for an individual to work by themselves and complete their business plan by themselves. There are some people who will work very, very effectively as solo entrepreneurs and who are able to develop the business network around them that they need to actually fully function as a great business. So please, if you are working by yourself, that is great. And please submit your business plan as an independent individual entrepreneur. We know that some people have also set themselves up as business groups, in which case they are very, very welcome to submit their business plan to ourselves for review as a business group. So we are quite happy for both ways to work. Individual entrepreneurs can send their business plans to us for review, as can a business team. I hope that's clear. If you need any more clarification, please do reach out to us.
And then Aminata is asking, how can you spread the cash flow when running 2 different businesses that are intertwined, like fish farming and fingerlings production? Well, actually, we had this example last week with the Trident fish farm, because the Trident fish farm was selling both whole tilapia fish and the tilapia sausages. So, exactly in the same way, if you are selling whole fish and fingerlings, you just include this in different items in your cash flow and the revenues from that. So you can just add extra lines to the Excel sheet if you need it, and integrate the whole cash flow. Even if you have totally different products, you can do that too.
So we have another question. Haj, I'm hoping that you can help answer this one. TechnoCXR has asked, what strategy do I put in place to finance a feed mill business without collecting loans? And this has come from Diamond Oriental Enterprises. So the idea of, if I don't want to go down a traditional investment where I'm paying interest on a loan, what other financial investment opportunities are there that I could possibly explore?
All right, maybe I could comment on that in the sense that you mentioned some of the sources to be, for instance, people who would, and these are the less expensive, of course, who would simply donate or be happy to participate in lending money without looking for a return because they want to help projects they care for. Now, if we talk of more let's say, traditional financial investors, I think the route of the participation, having a share in the business, and it doesn't have to be registered shares on the stock exchange and or even on the register of companies, but you can have maybe a specific agreement with a partner who brings in a financing element, and you draw an agreement how you will reward the person with the profit, the future profit of the company. And here I would really recommend you look at that in the longer term perspectives over several years, because if you're looking for that type of investor, they have to be committed for the long term.
Indeed. Anne, I know you have some thoughts as well.
Yes. I suggest you also look back at last week's webinar, because our guest speaker, Bora, talked quite a lot about some of these other possibilities through business angels, for example. These are generally successful entrepreneurs who have, got funds available and are interested in helping startups. So this can be a means of getting your capital without actually having a loan. The second main area is venture capital, and the venture capitalists are generally looking for what we call equity investments. So they're looking for a share in your company in return for the cash for the investments and the working capital that you need. So these are the main ways of finding the money without doing an actual loan. The issue with equity and through the venture capitalists, or even through, can be an individual that you give equity to, is that in general they want to also have a say in the running of your business, so that you can have a feeling that you're losing part of your control of over your business, but on the other hand you can get a lot of advice and support from somebody who's really engaged and wants to see the business flourish and then make money. The venture capitalists are usually looking for a time when the company is sold, so they can then recuperate their money back. And this can also be a disadvantage for you if you don't envisage in the future selling your business. So these are the different aspects to consider. And as I said, we covered this in quite some detail in last week's webinar. So go back to the recording and take a look at Bora's contribution on that.
Very much so. We have a question here from Mamadou, which I'd be really interested to hear your thoughts on, Haj and Anne. The question is it possible to raise seed capital, or is it compulsory to have your own capital to start your business?
If I may start, Anne, I think this is really has really to be linked to the nature of the project, because normally, if you want to attract partners and financial investors, they will want to see a certain amount of risk that you take yourself directly. And one of the best ways to do so is to put your own money into the project. The other challenge is that at seed capital stage, you really are into very initial stages of your project, and sometimes maybe the viability of the project is not yet fully proven, and it may be difficult to find financial partners for that. But as I mentioned, some investors are on the lookout for attractive, challenging new projects which they may evaluate with good return perspectives.
Indeed, and following on from that, we have got a question from Blessing, which is it advisable for a startup to give equity in their first year of operation? And this is always a debate. Do you seek for loans or do you go for equity-based investment? Haj, have you any ideas about that, particularly in the first year of operation?
Yeah, it's true that it's a debate, but at the end of the day, are you able to really do it on your own, or do you need that additional help and support from investors? And when Anne explained about venture capitalists or business angels, you have to really realize that these partners, because they have to be seen as partners, they have a genuine interest in your success. Otherwise, they wouldn't put the money there. It's not a Red Cross donation. So if they are prepared to join you, it's that you've been able to convince them of the business potential of your project. So I would not see equity partners as a problem or as a negative. They can also bring some competencies with them, which are useful for your project, other than financial resources.
Maybe I can just add a couple of comments to both those questions. Is it compulsory to have your own capital? Well, in the businesses that we're working with, our young agripreneurs, we find that many of them start their business either by raising money through competitions and prizes, or it comes from friends and families or their own savings. That is what we see as the most normal way of starting. Equity, when we talk about equity in the global north, we are more or less always thinking about venture capitalists. But I know in some countries in Africa, like Uganda, people receive their pension when they retire as a lump sum. And many of them are looking to invest it in a worthwhile business. So this can also be a route to explore of getting cash for your startup. But of course, you're going to have to make sure that you've got a steady income that you can supply to the person providing that, because they're going to have an income for them to live on. So that is, you know, one possibility to consider. I know this is valid in Uganda and perhaps in other African countries as well.
Okay, time is catching up with us. I've got one more question, which I would like to put to our great panel, and it comes from Catherine. And that question is about human capital. Obviously, we've had a lot of conversation this morning about the expenses, operational running costs of a business. But Catherine asks, how can we start up the building of a strong human resource capital, despite the fact that other capital has been talked about? And how do we retain human capital in a business for good? So, any thoughts, Anne or Haj?
I think that's really a question for Haj. It's his area.
Yes, thanks. Definitely it's important. I mean, the success in a business most of the times comes from the people. Or at least we can say people have a major contribution into the success of a business. Therefore, it's important that you can put in place the right conditions to retain the key people for your business. That can be done, again, it has to be matching the individual's expectations. Some of your partners or employees may be happy with just securing a longer term activity with a fair remuneration, and if you can make sure that this is fulfilled, they'll be satisfied. Others may want to have a more active role in the development of your business and then a bigger interest. I always have in mind this rule whereby from the profit that the business is generating, it's wise to secure 1/3 of the profit for the longer term projects. So you keep it in the company. 1/3 could go to those who really finance the company. So it can be you as the owner or the other equity holders. And 1/3 for those who contributed to the success by their work. These are your employees. So just keep in mind when it's possible, not forgetting about the employees into sharing the success, and I mean here also the financial success of your business. That's a very simple rule that I think everybody can understand. That would be my advice.
And it's good advice too, Haj. Thank you so much. So there are a couple more questions coming through.
Maybe sorry, Stephen, just adding something also, personal development is important, I think, for employees.
Very much so. And it is about creating that culture where everybody is working together and valuing each other's strengths and the diversity within a business. Yeah, so thank you. We have got a couple more questions that we're trying to answer by text as well. But thank you very much for sending your questions in. If you've got any more questions in the next couple of minutes, we will still answer those, but through the chat functions. I just want to move quickly on to look at what happens next. So to finish, thank you so much for your participation today. It's valued as always, and thank you for the questions that you've posed as well. The questions are really good for us because not only does it mean that people are actively sharing issues which are real to them, it also means that if you're thinking these questions, other people are as well. And it's good to be able to then share the answer with a wider audience. So thank you for every contribution that you make. As always, we will be sharing a recording of this webinar. The link will be sent out through both the Go Getters forum as well as on the course platform at AMI. So please do download it. It is quite large, but it's full of information. And we will be sharing the PDF deck of this presentation as well. Again, that will be on the AMI platform. And at the end of the course, we will be sharing these as a single document for you to access as well.
And we're sharing a document that gives the links to all the webinars and the presentations in case you missed an earlier one.
And as I mentioned today, it's really important to download this PDF so that you can access the links to the various different crowdfunding sites, the Nourishing Africa site, and the competitions. And remember, please, with all respect to Go Getters, which is an amazing opportunity, and it's fantastic that the 12 finalists are going through their process, but the Hult Prize is now open for registration for the 2021 prize as well. So please do look at that. Reach out to me if you have any questions at all from today's course. My email address is stephen@theagripreneur.org. And you can always reach out to me through the online platform as well through the chat function. And next week will be webinar number 9, the last but one of this webinar series. I'm really excited that we'll have a exciting and fascinating input from Ludovine, who was a member of a team that went right through to the Hult Prize in the USA last year, representing a business that was based in Uganda. So that's going to be really interesting, getting some real insight into what it's like, both pitching, but also in terms of a competition. And we'll have some input on the process of pitching, the development of a pitching deck, and what information you should be sharing through pitches and how you can adapt those to the different situations in which you find yourself. So thank you so much to everybody for joining. A huge thank you to Haj for his fantastic input today and his insights on finance and investments. And thank you very much for managing the chat rooms as well. Thank you again.
Thank you. Welcome. Bye-bye.
Bye.
And we will see you all next week, same time, same place. Bye now.